everybody. This is Rob Keynes with GoldSilverPros.com. It is Monday, December 13th, 2021. I can't believe we're at the end of the year already. But as such, we wanted to get an update from GoGold Resources, and I have here a very special guest, President and CEO and a Director, Brad Langille. Brad, how are you doing today?
Oh, you're doing great, Rob. Good to see you.
Yeah, it's good to see you as well. I made a special review of you guys in Idaho at the Silver Symposium. We had a breakout class on how to value a mining stock company, and I loved your stock because it presented several different ways of doing it, whether you look at net asset value or dollars per ounce in the ground. And it was a lot of fun to do that. And the reason I was able to do that is because you guys have a lot going on. You're a producer, you've got a lot of exploration going on, you have a project in which you have a lot of news that we're going to talk about today. But you guys have also had a banner year. So maybe just kind of review what's happened, with GoGold in the past year.
Yeah, no, we have had a big year. I mean, a big year for value creation in the company. And in fact, a big 2 years of value creation. Earlier in the year, on what we call our Los Ricos South project. Los Ricos is really the driver of the company. And we're very fortunate that we also have production in our Parral mine, which has been running for 7.5 years now and has 7 more years of reserves. That is generating a lot of cash flow for us, and which takes a bite out of what's a very, very large exploration project in Mexico. Our budget for the next 12 months is actually $24 million US of drilling. Okay. But in the last year, we completed 100,000 meters of drilling in Los Ricos North. We have just published last week, it's already hot off the press, our first maiden resource in Los Ricos North, and it's a big one. And it exceeded all of our analysts' expectations. And at the end of the day, what we found really exceeded our expectations. So it was great. And then Los Ricos South, last year we had published a resource down there, one that's 63 million ounces of measured and indicated, and another 20 million inferred. And that one, then we took it to a PEA. It showed almost $300 million in net present value for that. And on that deposit, we've been doing the work, bringing it towards a pre-feasibility study. So we can start talking about reserves in the future with that pre-feasibility study. So that's the last 12 months. And over the last 2 years, I've touched on the South there as well. And Rob, if you don't mind, I just have 2 slides I'd like to show people.
Sure.
You mentioned valuation. So really, this one right here, we're delighted with the performance that we've had right here. This would be the last year, and this reflects all the work we've been doing in Los Ricos North. So we were about an 86% return to our investors on the stock price. And, we're not a thinly traded stock. I mean, we trade typically here in the main board in Canada, plus $5 million a day Canadian of trading volume. And, some of the majors, it was a tough year in the sector in the last 12 months. A lot of the majors were down substantially, and the indexes, which are the GDX, was down 13, and the GDXJ was down over 20%, and we returned over 86%. And just if you look at the 2-year, now you're reflecting everything that's gone on here in Los Ricos, and you can see we've had almost a 400% return, while the indexes were close to a wash.
I want to emphasize a 400% return.
Yeah,
you guys are a producer, and you just went up 4 times, and you've got your biggest project coming down the pipeline. That's the great news.
And that's it. I mean, enough talking about what's happened in the past and the returns, because it's, for us, we're not interested in looking in the rearview mirror. It's what's ahead of us. And we've got some really good stuff ahead of us. So, and that's going to be all around adding more ounces in Los Ricos. That's the big driver in Mexico is Los Ricos North, Los Ricos South. And Los Ricos North in 2022, again, is going to be the biggest focus for drilling. And we're drilling for mostly focus on not infill drilling. We're going to focus on expansion of resource, because we see a big opportunity up there to expand our resource base. And I'll just give you real quickly the numbers. So 87.8 million ounces of indicated, that's silver equivalent. And that's at a grade of 122 grams silver equivalent. And another 73 million ounces of inferred on top of that in a grade of 111. 96% of this is in what we call pit constrained. So may develop into open pit.
Yeah, which means for investors, it's lower cost. Your cost of getting the silver out of the ground, of course, minus the byproduct credits, is going to be cheaper in an open pit than it would be if you're going down and having to dig tunnels and build underground infrastructure.
And quicker, and in many cases easier, and you know, higher tonnages and bigger mills and bigger production. And these numbers are a silver equivalent. They're not with a byproduct credit. They're a real silver equivalent number. And as much as we're a silver company, I mean, we're 65% silver, but you know, I'm also a gold guy, and I think a lot in gold, and especially when I think of economics in open pits. And I just look at the next slide here. So 96% of that was in open pits. This next slide, we're just looking at the open pit, because what that other 4% is 6.4 million ounces of inferred and 900,000 ounces of indicated, and that's what we call outside of the pit constraint. So that we would hope that all or a portion of that would fall into a bulk underground, but that's a small portion of what we're looking at in Los Ricos North. So we said we published this number, and that's the cutoff. So that's anything above 29 grams that we would mine in that open pit. And then some people say, well, what about a little bit higher cutoff? And you can see correspondingly, the grade goes up. You lose some ounces, but the grade goes up. Now, for us, realistically, and we'll move this ahead and you get into further economic studies, but we think, you know, 29 grams is a good number for cutoff, because, you know, you either move that rock out of that pit as waste, or you move it out of there as ore. So, you know, maybe you get your better net present value if you process at a higher cutoff first, and you stockpile the lower grade for the end of the mine life. That's probably what you end up doing. So that one's a good representation right there. But, you know, a lot of ounces at those cutoffs is still over 140 million ounces with 1.47 and 129, which are big grades for an open pit anywhere in the world, but and really great for Mexico, where our costs are a little bit lower.
Now, I do have a question before you go forward.
Yeah.
So you were talking about 4% maybe being later on, deeper underground. Is that the end of it? Is it still open at depth? Do you guys know?
No, that's a really good question, and I'll just throw this slide up here. This is those block models. Those are the ounces that we're talking about there in this resource study, and they're all framed with a pit, you know, to meet what's called the reasonable expectation of viability for 43-101. They don't want you putting in a resource ounces that have no chance of ever being mined. So we do these in an open pit to show that, hey, these would pull an open pit. Another point that's really important in the Los Ricos district, and if you look at silver mines, most of the silver mines in the world are either the silvers from base metal mines, copper, lead, zinc, that have a byproduct of silver, or a lot of what are kind of the silver mines are silver base metals. But the Los Ricos district, we only have one zone in the whole district that has base metals, and that's our 𝙂𝙊𝙇𝘍, and that's silver base metal. Everything else is silver gold. So why that's important is because it is a different process there. You know, you typically use flotation for sulfide ore, and you'd use a leaching, cyanide leach for oxide ore. So most of the ounces in Los Ricos are what we call whole ore leaching. So it's going to be crush, grind, leach and agitated leach right to a doré bar. And one exception is 𝙂𝙊𝙇𝘍, which is flotation. You know, you create a concentrate which has silver and base metals, and you ship that off to a final refiner, a smelter. But you mentioned, what about down deeper? And down deeper won't be the focus of 2022. It's the focus of down the road, because there's so much kind of easier stuff to find near surface. But what we think happened here at 𝙂𝙋𝙇𝙊𝙎 is that there was a fault in here, and this was pushed up. Because in a typical system like this, a low sulfidation epithermal system, at the top, you have ore with just mostly gold. And as you go down deeper in that system, and these are formed around volcanoes, you get down into a system that's then gold, silver, silver, gold, and much deeper in the system, you get into silver base metals. And then at the very bottom, you get into just base metals. So that 𝙂𝙂𝙃𝙊𝙎 was pushed up, and you know, it's pushed up, and this probably went up, and there's a big fault in here, and maybe down deep somewhere, silver base metals exist below these big ore bodies that are on top that are silver gold. So yes, there's other big targets potentially down deep, but we've got something far easier, we believe, in Los Ricos North. And here's our Los Ricos North up here. And this is the south, where we have that, where we drilled it first in 40,000 meters, and we defined that first resource. But in the north, we have this here. Here's a map with all kinds of color on it. But interestingly enough, we started out with a map from 1916, and it had all these crossed hammers. And in 1916, this district was alive, and it was mostly money from the United States. A few prominent families, one out of Boston and one out of Colorado, the Daly family, Anaconda, they were down in the south. And another family was up in the north, and they were developing. And all these little mines were over this big area. And we took this map and we visited all of these crossed hammers, or not all of them. We still haven't done anything really above the river here, which we plan to send a reconnaissance crew up there in 2022. But these kind of black, these are those pits I showed you on the other slide. Okay, so that's the resource today. And there's two areas that we are really excited about, and we're going to start drilling in January. One is this called 𝙁𝙊𝙇𝙑𝙊𝙁 up here. And there's a little bit more down here too. 𝙁𝙊𝙇𝙑𝙊𝙁 is something that is about 1.7 kilometers of strike length that we've now mapped on surface over the last 5 months, sampled in surface. We're getting some great results. When you see the magenta color, it's above 385 grams silver equivalent. And we've got the first drill pads built, and we're going to start drilling those the first 2 weeks of January. We hope to have by the end of February the first results out of what we think is going to be a discovery there. The most important thing on surface, it looks wide. Again, it looks a lot like this trend down here, 𝙂𝙂𝙃𝙊𝙎 and Alphavore. So, you know, we'll keep our technical fingers crossed on that one. Our technical team is very excited about it and thinks that it has a real big exploration potential. So that's where we're going to drive a lot of drilling in 2022. And by the way, we finished 100,000. We've started now on the next 100,000. And it's 9 drill rigs hitting the ground hard. And just the final thing, and then I'll let you ask some more questions. But, you know, we really did well in an area that we found right at the end of the first 100,000 meters. It's called Alphavore East. Mm-hmm. And it's everything east of here. And that's about 1 kilometer right there and growing. And you'll notice right here, I don't know if you can see it, but this is the pit. And we had to meet that reasonable expectation test that it'd fall into a pit. So those, and a lot of this did not. And there was a reason, not that it's not there, it just doesn't have enough drilling. There was a road that went for about those 1.1 kilometer. And it was easy to get the first holes in from that road. But that intersected the ore body, or it's not really a vein, it's think of it as a vein, it's very, very wide, but that intersected about 125 meters from surface. So we can only go so far with inferred, about 70 meters. And everything above that would have been, we treat it as waste. We know it's not, or we think it's not, but we have to get up dip drilling, down dip drilling, and a bunch more drilling in here. But the point is, this should grow substantially. And the updated resource that comes in 2022, this should all be in one big pit and grow a lot of ounces. So those are ones that to us are very obvious. Also, we did geophysics here, and that's how we found this. And we knew that this existed from drilling. We did the geophysics, and boom, it all coincided. You know, we could see that magenta lined up with ore bodies. There's the discovery in Alphavore East. We decided, well, let's keep on going that geophysics and drill off that. And we hit it. We know this is a real target, even though it's post cutoff for that resource. We see visually, we see what our team, and they've looked at 100,000 meters, and they're pretty good at calling high grade, medium, and low grade. So we're seeing good mineralization there. Also here.
Brad, I got a question for you, because a lot of people don't
Sure.
understand geophysics. They get the drill part. Geophysics is usually the step before, right? What is the purple showing you? Is it just a specific type of mineralization that you're looking for?
In this case, it's conductivity.
Okay.
So the mineralization here is not base metals. Like to the west of here, we have our 𝙁𝙊𝙇𝙑. I told you that one was silver base metals. Well, that shines on IP, or induced polarity, over there because it has calcium pyrite or copper in it. You know, just like, well, you have a copper wire, right? So that one shines. So we said let's try it over here. It's not the base metals, but there's pyrite associated with this, and that's what was conduct the electricity, and it worked. So and the final thing, you know, since we're getting into this, and boy, I'll tell you something, when eventually there is a mine here in the north, and we're very confident there will be, what a place to start. There's the western end of Alphavore, high grade, right on surface in drill holes. Low, it should be low strip. That's your starter mine right there to drive the thing. And those kind of grades that we're seeing in open pit, that's what mines are built around, you know. So that's what's really positive. So a lot more ounces to come in 2022 in Los Ricos North. And in the south, we think we're going to have we hope we're going to have some good news here soon, very soon. You know, we've done a lot of consolidation in this district, and it's really paid off for us. Like, we started here with 29 concessions. Now we're up to 44. There is one other that down here in the south, you can see there's a gap between the red blocks, our two sets of red blocks down there. Try to draw a line where that is. Kind of in here. Oops. And we think might be you know, that would be the last piece of consolidation we get done. And I think we're getting pretty close to getting that done. And that would add right on to the resources that we have at the end of our preliminary economic hit that we're kind of planning, you know. So there will be more drilling in the south. I guess at this point, that's the best thing to say about that. There'll be a bunch more drilling in the south. And this district is really growing into something is very important in the silver space, or the precious metal space. I mean, back again to that resource, you know, I don't know if most of your viewers think in silver equivalent. We are more a silver company than we are a gold company, being that, you know, we're 65% silver. But just think for a moment, for your viewers who still think in kind of gold, as I struggle to think in gold in silver sometimes. In the last year, we added 2.1 million ounces gold, 1.2 in the indicated, and about 1 million in the inferred. Open pits at over 1.5 grams, 1.6, 1.7 gram open pits. In the district, you know, you look at the whole district and combine. Now, in next March will be 3 years we've been there, but in less than, and Steve, it didn't move, just, yeah, so there we go. In less than 3 years, Like, we've turned this thing into a major asset in the business. It's now at about 3.1 million ounces silver equivalent, 1.9 in measured indicated, 1.2 in inferred. And look at the grades, like 2 grams. 2 grams, with most of that being an open pit, and 1.65 in the inferred, most of that being an open pit, or a silver asset that's 244. And I know there's some other silver assets, not a lot, that are bigger than that, but not this quality of grade, and not this metallurgy.
Yeah, and from the perspective of either gold or silver, I mean, the project looks viable. You have both, which is the good thing.
Yeah, and I believe in 2022 we're targeting. We believe, that this can change a lot again. So this is just such a big mineralized system, and for a company, a small company like GoGold, that's up around 800 million capex, and in US, and about a little under 1 billion Canadian, and trading great liquidity. Like our institutional support, we have great retail shareholders, but institutionally, we have all the top institutions in our space are very strong supportive shareholders. And we do believe the best is yet to come here. And 2022 is going to be another banner year for us.
Yeah, it definitely looks like it. You guys had a great year this year. Lots of value creation, a lot of resource is going to keep going, which is the great thing. So if you're interested in becoming a shareholder, it's not just getting in for 6 months. You guys have a long-term plan. Definitely look like you're going to be able to continue adding the ounces. And going back to my review in Idaho of you guys really weren't even priced up to your assets that you were exploring. Now that you have your estimate out for Los Ricos, you guys are really, I think, still undervalued if you look from a price to NAV perspective or net asset value perspective. So I think that there's a lot of room to growth in that share price, and the market will recognize that. And one other point I'd like to make, the base metals that you have are wonderful, because copper, a lot of analysts that I talk to think copper is going to be in a severe shortage over the next 10 years, increasing. Silver, we know, is already in one. And right now we also have, 14-year highs in zinc. So a lot of the base metals you're getting are very supportive of your economics for your project. It really does support that. So there's not a downside in terms of what you guys are pulling out of the ground. Everything's, green and positive for that. So one of the reasons I like covering your company, you guys just have a lot of positives for investors to look at.
And for your investors as well, there's a few things, and there are risk factors, obviously, in all the mining projects, and that's resources, reserves, and metallurgy. Like, metallurgy is always one, and you really have to look at silver projects, and you have to say, what's the metallurgy? Because in the south, really, we're in a pre-feasibility, and that metallurgy is getting better and better defined, but it's about 90% recovery in silver equivalent, and that's really good. And in the north, we've done our first round of metallurgy, and we saw the same. We thought that it looked like the south, but that first round of metallurgy, took away that fatal flaw risk. So it's really important, silver deposits, for your investors to ask the company about, hey, what's your metallurgy look like, right? Because silver, in a lot of cases, silver is a lot lower metallurgical recovery than gold, and in here it's not the case. It's good. Produce that 𝙈𝙁 at the end, and good metallurgical recovery on silver.
Yeah, easy to get to and easy to get out. It seems to be the story.
Yeah, exactly. And bulk mining, either be it open pit or underground bulk mining, is a good place to be. It's makes it easier, faster.
Yeah, well, great. This has been a great update, Brad. I appreciate you guys so much. We followed you here for, I guess, going on 4 or 5 months. You guys seem to be hitting it on all cylinders. Of course, the market has noticed. You guys have done very well this year, and I think they're going to continue to notice you, especially as that more information on your drill results come out in 2022. So we'll be right there with you. We'll be covering you guys in 2022 as well. So people can stay tuned for that. I know we have a lot of interest in this company. So appreciate you joining the show today, Brad.
Yeah, no, thank you, Rob. And there'll be lots and lots of news flow, as always, pretty much on a weekly basis. We have news coming out. So stay tuned. I think 2022 is going to be a great year.
Okay. Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so
so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.